And welcome back to the Market Day Report, where we're going to take a look at your grain trade and your livestock market activity. Let's take a look at how we're opening up here in the corn and soybean trade right now. So going to the big board in Chicago, let's take a look here at this corn market, where we have December currently trading about 3/4 cent higher. We're now at $3.49 even per bushel. That's just a couple of ticks from our low of the day. The entire trading range is not even 2 cents wide if you figure in the overnight trade and the early morning hours as well. And July corn is up a half rather, at 3.78 3/4. And let's take a look at our soybean trade here this morning. And on the soybeans, we have the January contract 1 3/4 higher now at 9.88 and we have the March up a penny and a half at 9.98 3/4. Let's take a look at the wheat trade. How's it going in the early morning? Well, we have December Chicago wheat 3.5 higher at 4.29 1/4, and we have July new crop 2 3/4 higher at 4.73 3/4. How about Kansas City wheat? Well, we have the December contract now 2 1/4 higher. 4.29 is our last trade, kind of in the middle of our narrow trading range here. July new crop up 3 at 4.77 3/4. On the Minneapolis trade, we have the December contract now 6 higher. 6.30 3/4 there. And July up 3 3/4 at 6.53. In the cotton market right now, your nearby December contract is trading at 68.26 cents per pound, and that is down 46 points on the day. Well, let's go ahead and welcome our guest analyst in the studio. Chris Swift joins us right now. And Chris, of course, is with Swift Trading Incorporated, and he's based right here in Nashville. And welcome aboard.
Good morning,
once
Mark.
again.
Thanks,
Good to
sir.
see you
Absolutely.
again. All right, so your analysis here as we take our first look here at the grain trade this morning. Everything a little bit firmer. Haven't seen that for a while.
It is, but there's just not much happening again. Our currency markets aren't doing much to increase our import-export business any, and corn has found a very happy home within this 10 to 15 cent trading range that we've been in, and the likelihood of it breaking out anytime soon doesn't seem to be very good until we change some difference in the fundamentals.
So we have the big USDA report coming out on Thursday. The crop production report, supply and demand report numbers. Typically in the month of November, is that much to really be concerned about in the market, or can it be a mover?
It will definitely be different because you'll have some of the crop harvested. So now that you've got some actual yields in there to go by, and I think Informa last week raised their yield per bushel acre per bushel up quite a bit over USDA. So it could be a surprise to the market to come in if USDA agrees with some of those increases from the harvest that we've already seen.
We're looking in the neighborhood of what, about 173 bushels an acre
right
now
at
on the corn,
173,
is that right?
That's correct, yes.
Now, did I understand right that the average trade guess on soybean yield may be backing off a little bit, maybe?
Just a little bit, maybe a half a bushel per acre. I don't think they're looking for much more than that, but we still got some issues up in the northern tiers there. The weather just hasn't quite been perfect, and as I traveled through West Tennessee, I saw a lot of beans laying down. So there had been either some wind or some rain damage, but there was quite a few beans down that still hadn't been harvested, and with this rain, it's going to shove them off another couple of weeks.
You know, I have to admit, I was driving up through central Kentucky yesterday, and I noticed, too, that there was a surprising number of soybeans out in the field. But I guess it's a little different because in the plains, you plant soybeans for the whole growing season in the spring, like you do along with the corn. But when you get in the southern areas there, like the Mid-South, let's call it, there's a lot of double crop.
That's exactly right.
So they get the wheat out first, then put the soybeans in, and I think that's where they got caught. They just can't get in the field; it's too wet.
Right.
So something to keep in mind there. A lot of double crop beans in the south and southeastern U.S. All right, Chris, if you don't mind, we'll come back in a moment, and we'll talk a little livestock trade. We are talking with Chris Swift of Swift Trading Incorporated, and we'll be back with more with Chris. We'll talk cattle and hogs when we come back. We are talking with our very special guest, Chris Swift of Swift Trading Incorporated in Nashville, Tennessee. He is in studio. And Chris, I want to take a look at our opening prices here on the live cattle, the feeder cattle, and also on the lean hog trade, if you don't mind, because we did have a limit up close in one contract on live cattle when we went home last Friday. Only one.
That's right.
But from what I understand, that means expanded limits for all the live cattle today.
Yes.
Just wanted to clarify that. All right, let's go take a look. Here we go. Live cattle trade, now December, up 8 cents. You know, we were lower just a few minutes ago before you showed up on the set. You might be good for the market. December up 8 cents at 127.38 right now. February unchanged at 131.75. And now we're just a dime off of our high of the day. You know, we talked about this earlier where maybe there was a little bit of profit taking right out of the opening gate this morning. Might be, you never know. April 12 higher at 129.92. And if you look at the feeder cattle trade here this morning, right now on the feeders, you have everything higher once again, just a little bit. We have the November up 13, January 6 higher at 161.58. Now, this is after posting a low right after the open of 160.62 per hundredweight. So we have come back off of that by about 95 cents already here. If we can, I wanted to throw in the milk prices too, since we're talking livestock here. Class 3 milk this morning is mixed. The November a little bit firmer, but we're basically following December, and it's down a nickel this morning at 15.64 on that December contract. All right, your first thoughts here as we talk about the cattle market in the early going this morning. They sold it off, went down about $0.50, and then you walked in, and now they're a little higher. How come?
Well, I'm not really sure, but the demand for beef is just phenomenal. Our export numbers last week were great. A little over 322 loads more than what the previous week was. Both the primal rib and the loin have both risen significantly in price, and the consumer has continued with his demand, but also the export demand is just phenomenal. It keeps taking up the slack where people think that there will be slack in the market, and there's just not.
And the placements just month after month after month were higher than expected.
They are being higher.
Yet we have the feeders hanging right in there, don't we?
Definitely moving the cattle out of here, and the faster, the more volume that you turn the cattle out, the better off that the industry stays.
How's the packer bottom line right now?
Well, it's still very profitable. They have not lost much margin at all because boxes have increased in prices as well with the live price. So it's kind of moving up hand in hand right now.
Okay, lean hog trade. Let's take a peek here and see what's going on the big board here. We'll take a look at our prices. And as we look at our lean hogs, we have December now 48 lower at 64.62. February unchanged at 71.98. April down a dime. It's really dragging its feet here. What do you think, Chris? Is party over in the lean hog trade or not?
Well, it maybe. I've read some news that China is not importing near as much pork as what they started with for the first half of the year and coming now into the end of the second half. And we still have a significant elevated lean hog production going on. So we're not going to slow down the production anytime soon. If demand does slack up a little bit, we could see the hogs set back just a little bit for a while. All
right. So you're located here in Nashville. If somebody wants to give you a buzz, I assume you'd be fine talking about it before the reports.
Absolutely. 877-863-2206.
That'd be great. Thanks for coming.
Appreciate it, Marlin. Thanks, sir.
We've been talking with Chris Swift. He is with Swift Trading Incorporated. He's based right here in Nashville. Janet, with that, I'll kick it back to you.